Hi, I'm Scott from Solace Financial, and this is a market update video for my clients, friends and family. None of the information in this video is personal advice. Please give me a call before doing anything. In this video, I want to talk about two things. My review of last year's investment markets and my predictions for next year, or this year, 2023. Last year in investment markets is one of the hardest that I've seen in the last 20 years of doing this. There was nowhere to hide. Bond markets, which I talked about a lot in my videos, and share markets all went down. It's now being coined the Great Inflation. In this chart here are all of the balanced funds, or my normal retirees funds, and the index, so what the market average is. And for last year, it was minus 16.9%. You've also got the US share market last year, which was minus 18.1%, and our share market was negative as well, as seen by this chart. So very difficult year, and one of the reasons why it was the most difficult that I've seen is that over the past 3 years, we've seen no growth in the share market. So it's been extremely difficult to eke out a good return of 6 to 7% for my retiree clients. Even more difficult for clients that are trying to grow wealth and build an investment portfolio. So that's last year, and thank God that's done. But for this year, we are taking, just recently we sold in our clients' retired accounts, balance funds. We moved a lot from shares into cash and fixed interest again, so even safer again. In December, we saw a little bit of rally in share markets, so I took some of the profit there. We now have, for a normal balanced fund investor, 60% in cash and fixed interest and 40% in shares. Usually it's the other way around. And the reason for that is I don't have great news for this year, 2023. I think that the US is going to go into recession, and I think that we're going to see a share market fall. If that happens, we believe that bond markets will rally, so we'll get some really good returns out of the defensive side of clients' balance funds. And we've applied this all through all of the different portfolios. So if we do see a recession, we think our portfolios will still do well because we've got more in bonds than we do in shares. And we'll also see this as a really good buying opportunity to move back out of cash and bonds and put it back into the share market, get some really good bargains, some really low value in the share market. So then when it turns around and goes back up, we'll do really, really well for clients. So I think the second half of the year is going to be a lot better than the first half of 2023, but anything can happen. If you've got any questions or concerns, please don't hesitate to give me a call. Thanks very much for your time.